What's up, you guys? Welcome back to the channel. Now in today's video, we're going to go over why you may want to consider buying some more shares of NIO and if they're potentially a buy at this price that they're trading for right now, right around $41 to $42. But before we actually get into the video, if you guys are new here, my name is Evan and I make videos about different hot stocks that have a lot of growth potential. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, while you guys are down there, if you wouldn't mind hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. But with that out of the way, if we actually take a look at NIO's share price today, they're actually down right around 0.2%, so they're really not down too much today. And they're currently trading right around 41.30 or so, but they actually opened today pretty high on some pretty high volume, and they were up to about 8% in the green during early morning trading. And at that point, they almost got up to $45 for their share price. Now, of course, most of the time throughout the day, we see them kind of pull back, especially on those days where they actually spike up during early morning trading. Typically, we see a pullback throughout the rest of the day, and that's kind of what we're seeing today, especially because there was such a big amount of volume during early day trading. So I'm sure despite all these price drops we've been seeing in the EV sector, a lot of you guys have probably been buying the dip. And if you haven't, then you probably don't actually believe in electric vehicle companies long term. Because if you're a long-term believer in all these different companies like NIO, Tesla, XPeng, and whatever other electric vehicle companies you want to name, if you don't believe in them long term, you really shouldn't be investing in them at all. Because short term, these stocks are so volatile and they're so unpredictable that you don't know where they're going to trade. And if they're going to be up one day and then down the next day and stay down for even weeks at a time. But I think we can all come to an agreement that the electric vehicle sector is going to be a huge market in the future, and it's already starting to get there. And even by the year 2025, which is in only 4 years, China wants to have about 20% electric vehicle adoption. And if you compare that to right now, the total electric vehicle adoption in China is only a few percent. And then I wouldn't be surprised if in the next 10 to 15 years, there was somewhere near 50% adoption of electric vehicles across different countries. But projecting NIO's 2021 sales and what they could potentially deliver for vehicles, the company currently looks very attractive, and there's definitely a few entry points you may want to consider buying in. Now, before this week, we weren't sure what the bottom was going to be necessarily, and we weren't sure when Tesla, NIO, and these other electric vehicle stocks were going to stop dropping. But it looks like we may have hit the bottom, and these stocks are starting to recover, and of course Tesla is leading the way. And they're really kind of setting the benchmark. And again, NIO and these smaller EV stocks are kind of following them. But with NIO's growing production capacity and their expanding battery swap network, NIO definitely seems like a strong buy as of right now. But I think one thing that's really concerning a lot of investors is the global chip shortage, which is causing a lot of short-term disruptions, not only to NIO, but to a lot of auto manufacturers around the world. But we know that this chip shortage isn't going to last forever, and eventually it's going to be solved, and these companies are going to be back on their feet, and they're going to start going back up even to where they were trading just a month ago. Because NIO is actually down almost 45% from their all-time high price. And like I mentioned, they're approaching some really attractive entry points, especially with them starting to bounce off the support line that they had right around $30 to $35. And while their valuation still seems kind of stretched, it definitely can be justified more easily that NIO's growth is really going to outperform compared to when you're just looking at their valuation right now. Because we know their market cap was actually up to about 90 billion, and it may have even hit 100 billion at one point. At that time, it ranked NIO as number 3 in terms of top auto manufacturers when you compare them based on market cap. As of right now, NIO is actually about number 8 or 9 on the list, and that's because their share prices dropped so drastically, it's really brought down their market cap. But when we look into their sales figures, NIO's actually sold 43,000 vehicles, almost 44,000 in 2020. And that was actually a 112% increase over the previous year, which was just over 20,500 vehicles. Their total revenue also grew 107% year over year, and their projections for Q1 of 2020 in terms of vehicle deliveries is somewhere between 20,000 and 20,500. And their quarterly revenue is estimated to be between 1.13 billion and 1.16 billion. And we also know that NIO has already sold over 12,800 vehicles in just the first 2 months of 2021. And they definitely remain on track to achieve the forecasts of between 20,000 and 20,500. But like I mentioned earlier about the chip shortage, NIO isn't the only one being affected, and this is really affecting a lot of major automotive companies like General Motors and Ford, who actually had to cut their production due to this global chip shortage. I think a lot of people are under the influence that this is only affecting NIO, Tesla, XPeng, and Li Auto, but you can see that a lot of other companies, and it's not just limited to General Motors and Ford, there's a lot of companies being affected by the shortage. And according to research by IHS Markit, the auto industry is expected to manufacture 672,000 fewer vehicles in Q1 of 2021. And as such, NIO announced that they're going to be cutting production to 7,500 vehicles per month. Now, this might not seem like a surprise if you weren't aware that NIO actually increased production capacity to 10,000 in January. And I believe this 7,500 capacity reduction actually took place in February. And there was also a week in February where NIO wasn't able to produce vehicles because of the Chinese New Year. A lot of companies shut down during that time, and so NIO was affected, and they only produced about 3/4 of what they had produced in January. But NIO is still such a hot stock right now, and at this time, with any kind of small bad news, it causes significant volatility, and especially with such a big matter like this global chip shortage. Of course, we're going to see the entire auto manufacturing sector being affected. And like I've said before, if you believe in these companies long term, there's no reason not to add on the dips. Too many people get concerned that the market's pulling back and they think that it's a stock market crash, but they don't realize that people who have cash during a crash are the ones that benefit the most. The market has always recovered, and over any 20-year period, there's never been a negative return in the market. So just keep that in mind when you're buying into these companies, especially when you see a dip and when you see these companies pulling back so drastically. Now, I wouldn't advise you to do this on companies you don't believe in, but a company like NIO that I know a lot of you guys are invested in, these dips, especially when NIO pulls back about 45%, there's really no reason not to bulk up on your position and really bring down your average share cost, because you're really going to thank yourself a lot more in the future. Now, keep in mind, I'm not a financial advisor, and you guys need to do your own research on these companies. I'm just kind of giving you guys the facts and the information about these companies, and you guys have to do your own research outside of these videos that you see on YouTube. But getting back to NIO, their negative gross margins actually pointed out a concern for a lot of investors, but they also managed to turn this around in the second half of the year and reported 12.9% and 17.2% gross margins in Q3 and Q4 respectively. And then they ended the year with an annual gross margin of 11.5%. And it's also worth noting that their gross margin also continues to be below that of Tesla, which reported a 21% annual gross margin. But also you should keep in mind that Tesla has an advantage of increased profitability through the sale of regulatory credits. Now, this isn't something that NIO can take advantage of, but NIO also has the support of the Chinese government, which I'm not sure if Tesla has that same support from the Chinese government. But there's one big aspect to NIO's business model that I think really gives them an edge over different companies, even over Tesla, because Tesla actually spent years and billions of dollars to expand their supercharger network in the US. NIO, on the other hand, is investing in battery swap stations where vehicle owners can replace their empty batteries with a fully charged battery in under 3 minutes. And on top of this, it also allows customers to purchase a NIO vehicle without the battery and at a much lower price, about 20% lower than it would have originally been. And so this allows a lot more customers to buy electric vehicles who maybe wouldn't even have considered purchasing one in the past, because electric vehicles cost so much more than an average vehicle. Now, this is mostly just due to supply and demand. Because there's not enough demand for electric vehicles, the prices are so high. If there was more demand, we would see the price of electric vehicles come more down to earth, and they would be a lot more affordable for many more people. So it really is just a supply and demand issue. And once people start adopting electric vehicles a lot more, we're going to see those prices come down. And so we're going to see more vehicles on the road, and they're going to be a cheaper price. But going back to their battery as a service, NIO has actually partnered with a China state-owned electricity distributor to build 100 battery swap stations across China. And it really seems like NIO is making a lot of investments in the right areas to really scale manufacturing and production volume. And now that they want to expand their network of battery swap stations, it's really going to put them in a good position in the future because there's no other companies that really do this as well as NIO. A lot of people argue that Tesla tried to do this in the past or that they considered it, and Tesla said that it wasn't really worth the money or the effort to put in these battery swap stations. And while it may cost NIO a lot more money than just putting out normal chargers, it really does set them apart, but the ease of access and the time saving that customers are going to get, this may be a big reason for a lot more customers to buy a NIO vehicle, even if they are slightly more expensive than the competition. But with all this said, NIO is really exhibiting clear signs of a successful growth story, and with the global chip shortage that we're seeing being a potentially limiting factor for different companies, it definitely presents as a good buying opportunity for a lot of different stocks. And the 45% correction that we're seeing in the stock price of NIO really does make this company's valuation a lot more attractive. And if there was ever a time to buy into NIO, and maybe you regretted not buying in the past, now may be the time to buy some shares and build up a decent position. Now, if you guys aren't so sure and you're not sure if NIO is going to continue dropping, I would suggest dollar cost averaging in. All you have to do is set aside a certain amount of money and invest that much money every week or every month. Depending on the share price, you may get a different amount of shares every week or every month. But in the long run, you're going to have the average share price of NIO over that extended period of time. So you won't have as big of losses when NIO drops if they were to drop again, but you also won't have as huge of gains as if you had just bought at the bottom. But it's all about risk management when you're investing in the stock market. If you guys are just going to invest in risky stocks, or you're just going to day trade these different stocks, you probably want to be buying penny stocks. But for those people who are buying long term and they really trust in these companies, dollar cost averaging is probably your best bet, especially if you're not sure if NIO is going to continue dropping. Now, for those of you who made it this far into the video, I want to hear what your guys' 2021 prediction is for NIO share price. Now, before we saw this big pullback, I said that I could see NIO getting up to $100 by the end of the year. And that was on a prediction that they may hit 150,000 vehicle deliveries by the end of the year. Now, with this global chip shortage, it looks like NIO is probably going to deliver between 100 and 105,000, or somewhere around that area. So taking that into consideration, what do you guys think NIO share price is going to be by the end of this year? Also, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. And when you sign up and deposit $100, you'll actually get 2 free stocks, and I'll also get 1 free stock. So it really helps out the channel, and I really appreciate anybody that signs up. So make sure you guys sign up while this offer is still available. And if you guys enjoyed the video, make sure you leave a like, subscribe, and hit the notification bell so you never miss when I upload. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.